All right, let's talk about life insurance. So sorry to be all doomy and gloomy and bring it to you from a cemetery, but one of the biggest things that we have to come to grips with is that we're all going to end up here one day, right? I mean, maybe not exactly here. Maybe you're going to be on an urn, on somebody's fireplace, or scattered in the ocean. But something's going to happen to you someday, right? We all got to come to grips that, this day's going to come at some point. And what does that look like, for the ones that you leave behind? What does that look like for your family members, right? What is that day going to look like? And that's the whole point of life insurance. And life insurance is something that has impacted me long before I got into insurance. It's something, that is very personal to me. And, right back here, both of my parents are right back here, right? And how they both ended up here are very, very personal stories to me. And I actually write a little bit about each story in the book that I wrote a few years back. Is this really real? And, if you ever want to hear some personal stories about me, grab a copy of that book. Both of those stories are in there. It's not, the whole book is not about that, but those are definitely in there and play a large role because it just sparked a question, right? Like, what happens after this? What happens after, you pass away, and you end up at a place like this? What happens, right? So, I dive into a whole journey with that. And, it's not a book to force any conclusions on you. It's just things that I've come across in my life, but it's for you to just reflect and just think about it. Like, what happens, after we leave this earth? What happens to us? But anyway, back to life insurance. So life insurance has been something that's been always very important to me. It's something I've always valued. When you're looking at benefits at different, careers and different things like that, or just policies outside of that, life insurance has been a big deal for me, right? Because I've been impacted by life insurance. So not to go too deep into it, but like when my mom passed, she had life insurance through her work, right? And thank God she did, because it really helped out with me and my brothers as far as, with the funeral costs and different things like that, and just, helped us with different things we had each going on in our life. It wasn't a crazy policy, but it was good, right? It really helped us out, in that time of need, just to have that little bit of income coming in, and it was very easy to do, it was just pretty much a phone call, and then everything was taken care of. And then going back to, my father, which was a long time ago, that really helped our family, right? And he actually didn't even have like life insurance per se, but what my parents had, and I always remember them talking to me about this when I was little, and that's they had insurance on their mortgage, right? So it had to be some type of life insurance, like, that's what I was thinking at the time, because what would happen is if one spouse died, the mortgage would be paid off. That was the insurance that they had. So when my dad passed away, he was, the main one that was bringing income into the home, and that, right before he passed, he was laid off and different things. So there wasn't a lot of income. My mom was actually working also, and she was taking care of us. And, it's the American way, right? Everybody's just struggling to try to make it by. And that's just kind of what my childhood was. But then my father unexpectedly passed away. It was devastating, obviously, but, it was a financial burden, and if my mom and my dad did not sign up for that, when they first got the mortgage, I mean, we wouldn't have been able to keep the house. My mom didn't make enough to pay the mortgage payments and pay all the bills and raise 3 kids on her own. So who knows? I have no idea when my life would have turned. If we lost that house, maybe we would have to move somewhere, totally change the people that I met. But just life insurance has touched me so much. So that's why whenever I get a chance to talk about it, I like to talk about it, right? And tell you about the benefits of it, because it's not just numbers on paper, it affects people's lives. All right, but with that being said, let's talk about whole life versus term life, right? So what's the difference, right? You may have heard the terms whole life versus term life. So let's dive into it, right? Let's dissect it. So what is whole life, right? So whole life is kind of how it sounds, right? Your whole life, you're gonna have it, right? So it's like permanent insurance. So if you sign up for like a $250,000 policy, whatever age you sign up, whenever you die, however long away that is or short, the payout's going to be $250,000, right? It lasts your whole entire life, right? With term life, the big difference is, just think term with the T, temporary, right? If you want to remember it easier, temporary insurance, right? So term is only going to be a certain term, right? So you could do like an annual renewal, which you might see a lot common like with employment and different things like that. So you're paying a certain rate based on your age. And you'll notice if you're in those a while, every year it goes up, it goes up, it goes up, it goes up. And then once you get into the higher years, the risk, it's much more riskier, right? And the rate's going to go up a lot more, right? So that's how you see a lot of those play out with term. But the big thing with term is usually by like age 65, they're not renewable anymore. So you're not going to be able to go beyond age 65. So that can be okay depending on your situation, right? Because if you're just looking to get life insurance, you know, to help your loved ones out with the home, the mortgage, you know, things like that. Well, when you're older, you're not going to have as many of those liabilities that have to pay off and different things like that. So term might be the right solution for you, because term is obviously going to be a lot cheaper because it's temporary, right? And whole is going to be more money because it's your whole life. You live to 110, I mean, you're going to get it, you know, then. If you die, you know, you get it age 30, you die age 31, it's going to pay out then, and you've hardly paid into that thing, right? So, but you don't have to worry about any cutoffs at age 65 with whole life, all right? But let's dive into like more specifics. What's the big difference, right? So that's kind of a general concept, but let's dive in a little more, right? Because you get a lot of benefits with each one, right? So with whole, what's happening with that, right, is you're putting your money away. It's almost like into like a savings account, right? And it's just getting put away, put away, put away. So it's pretty much your money. So whatever you're paying a month, if you're paying $250 a month, you're just putting away year after year after year after year, decade after decade. It's just going into this account and it's just growing and growing, right? So that's what the insurance company is going to use to pay you off, right? Or pay your family. So that's the whole point of the whole life. So, but like we just said, what if you're age 30, you get it, and then age 31, you know, God forbid something crazy happens, you pass away, right? Now what, right? You didn't pay that much in, right? How's your family going to get $250,000 if that's the policy? Like, let's just keep the math easy. $250 a month, let's say get you $250,000, right? So what's going to happen then, right? So that's the whole point of insurance, right? So the $250 that you're paying every month, let's say, not that whole $250 is going to go towards, you know, like that saving account, right? So the insurance has to take a premium out of that because they're covering you, they're insuring you that, hey, you might not live long enough to accumulate $250,000 into this account. So we have to pay the difference, you know, it's whole life. So it's guaranteed as long as you're paying your premium, they're going to pay it off, right? So that's the big deal with home life, okay? So the benefit with that is you accumulate a cash value. That's your money. So it goes into an account, but it's yours. So at some point, if you wanted to borrow money, because life takes twists and turns, right? It's not always, hey, life's just great and it just grows and grows and everything just gets better all the time, right? Sometimes you take dips and different things happen. Sometimes you might need to take out a loan. Well, what about all that money I've been paying the insurance company? Well, that's what's great about whole life. Now you can go into that and you can borrow from your cash value, which is that amount that you've put in there, right? So you can borrow from that, right? So the benefit of that is huge, right? But also keep in mind, if you do take money out of that, you're lowering what's in there. So the death benefit is going to be less at that point, you know, if you were to die before you repaid that. So just things to keep in mind if you do take money out of it. So with term life is you're going to pick pretty much a term, right, that you can pay it. Let's say you pick a 10-year term, right? So this is why you might want to pay ahead of time, because you can get a lower rate when you're younger, right? Because if you buy it when you're 30, life insurance is cheaper, right? Because you're 30 and you're less likely for something to happen, right? It's all data, right? That's all insurance companies do, run all the data. I talk about this in all the videos. They're running all the data, figuring out, you know, what percentage, and when the percentage jump up that you might start to get certain diseases or certain things happen, boom, that's when rates go up, you know, because they have to have enough money in this big account that they accumulate to be able to pay out the claims. So with term life, if you do like a 10-year term versus like a 20-year term, well, obviously 20 years, that's a bigger commitment, right? The insurance company's now going to cover you for 20 years. So if you take out a 20-year term policy, the payment's going to be higher because that's a 20-year, that's an extra 10 years there, like, you know, in case you die during that 10-year period. So a shorter term is always going to be less. So the thing with term insurance that's really great is because you could get into a really cheap policy, and if you do year to year, let's say, you know, you can't commit to like a high payment for a whole life, right? And you're just looking at temporary insurance. You can spend, you know, whatever it is, $15, $20, $30 out of your paycheck or whatever it is, just paying in the policy outright, and it's going to pay you, maybe $250,000, right? And you're only paying a little bit, right? So that's the benefit that I always saw. I was like, this is pretty awesome to have life insurance, because you're paying this little amount, and how many years it would take you to like accumulate that into a saving account to be able to pay it off. I mean, that to me became a no-brainer to always have life insurance. I always get life insurance because to me it's a no-brainer, when you get into the whole life, yeah, now you're committing a lot more of your funds, but it's still your funds, so that's the good thing. So when you're in a financial position to do that, whole life can make a lot of sense for you also, because it's also going to accumulate a little bit of interest in that account as well. The other thing we want to talk about with whole versus term is you might be able to have it be convertible, right? So it might be able to convert. So you might start with a term life, and then you convert to a whole life. So the big thing with life insurance and getting approved is your health, right? You got to go through a physical, you got to go through all these things. So if you can avoid that, and you can just, hey, you have that one policy and you just keep rolling it with you, and you convert it to what makes the most sense for you, without having to go and get more exams and different things like that. And I'm not saying they're all like this, so this is just like a general, they might require exams, it all depends on the exact policy, but that's an option sometimes, right? Is you can convert it. So in a nutshell, with whole life, just think permanent. With term life, think temporary, right? Term is going to be cheaper, whole is going to be more, but you have access to the money in the whole life, and you don't in the term, right? Once you pay it, that's it, right? You're just paying the premium to the insurance company to insure you. And the great thing about whole life is, let's say, you do live beyond it, right? So, it used to be 100 years. Now it's like close to like 120 years, but check out your policy. But let's say, modern medicine, and you live beyond it, whatever that term amount is, you're going to get paid out while you're alive. Because, as I said in one of my videos, congratulations, you won the game of life. You get the payout. Congratulations, you win while you're still alive. You outlasted what your policy was. But if you want other great content, also check out Insurance Exam Queen on this stuff, because that's who I learned a lot of this stuff from. As far as details go, that's who I was studying when I was learning for the insurance exam. Insurance Exam Queen made sense. So, I don't know her in any way, I'm not affiliated with her, so I'm not like promoting her channel like that. I found a lot of educational content on her channel with her and Peter. They do a great job. So yeah, I knew a lot about life insurance just from studying policies and stuff before I even got into it. But she was one that I learned a lot from watching her videos. But let's talk about a couple other things. I know this is whole versus term, but since we're talking about life insurance overall, let's talk about a couple other ones, right? So they have universal life. So what's cool about universal life is, let's say you want to have a $250,000 policy. You just say, hey, I want to have a $250,000 policy. They're going to tell you how much to put in. But let's say life gets tough, right? And you can't put enough in. So now what can happen is, if you have money in there, it can actually pay your premium. So it can kind of cover you, and you can actually go like a few months without paying or whatever it is. As long as you have enough in there to pay your premium, a lot of people, it's a popular option because it gives you flexibility with that, right? Because you don't have to pay the same premium every month. You don't want to pay like a whole life policy for years and years and years, and then, all of a sudden you can't pay it anymore. I mean, there's options at that point, but because it's your money, but still, or term life, you put all that money in, you pay year after year after year after year, and then you can't pay anymore because the premium just went up so high, you don't get, anything back. So those are the things you have to weigh when you're looking at your different life insurance policy. And then they have like a joint life insurance, right? So like you and your spouse, what can happen with that is, instead of having two different policies, you can just have one policy, right? And it's going to cover both of you. So whoever were to die first, that second one gets the benefit. So it's going to be like in between, right? It's not going to be as much as two policies, but it's going to be more than just one policy. But then it protects, that surviving spouse, that they're the one that survived. They're going to get something, to try to help pay the bills, because now they're the only one left. So that's a really cool one to look into also. And then there's another one where it's survivorship, right? So survivorship, what's cool with that one is if you're looking for your kids only, right? So you're like, hey, we're going to be okay, even if one spouse goes before the other, but we want to take care of our kids. We want to make sure after that second parent passes away that there's something for the kids. So that's when you would look into the survivorship one, because then after the second spouse dies, now the kids get the life insurance. right? So it's all your dynamic, all your setup, what makes the most sense for you. Is it to take care of your spouse because you don't have a lot of income coming in? Everybody would love to take care of their kids, but maybe, you have a lot of bills that you got to make sure are taken care of. So that might be a great option for you. Maybe you're kind of set up, but you want to give your kids a little something extra. That's something you could do. And maybe they got to look at your estate taxes and different things like that. And then they have variable life, which is going to be like putting your money into stocks and investments and things like that. But we're not going to dive into that in this video. I mainly just wanted to cover, it's whole versus term, but because we're talking about it, I wanted to throw a little bit about universal. Also good to know about, if you want to do one spouse, you want to do a joint plan. If you wanted to do survivorship, look after the kids. But the biggest thing at the end of the day, eventually one day, unfortunately, all of us are going to end up in a place like this. And you just want to think like, hey, what's that day going to look like? How can I make that just a little bit easier on my loved ones and leave a legacy, right? So the other part of this is leaving a legacy because, like my parents, with the house, that was the house that they built, right? So we got to keep that in the family. We didn't have to move somewhere. So even things like that, if you're trying to put a little bit of you, passed on, and things that you accumulate that maybe they wouldn't be able to afford to keep without that life insurance being able to help keep things in the family. It just keeps your legacy going, right? Keeps the family legacy going. So I think it's really important. It helped me out in times of need, and maybe not even necessarily need. It just was very helpful, to have some of that stuff. One was probably need. I was too little to totally get the concept, like when my father had passed. But, you just never know. You never know when that day is going to come. It can come when you're little, when you're middle age, when you're older. My family, I've seen it all different ages. I'm sure your family's the same way. But anyway, thanks for watching. If you have any questions at all on life insurance, I just wanted to give a really quick rundown on whole versus term and kind of what the difference is, because I used to get confused on what's the difference. I just knew life insurance overall, but I didn't really dive into the differences. So that's what I've gotten into now that I've gotten my licenses and different things like that. But anyway, thank you for watching. Look forward to seeing you at the next video.